afternoon, everybody. Welcome to your weekend edition. It is Friday. Cheers, everybody. No scotch for me. I'm not a big scotch fan. More of a bourbon. I'm going Blanton's today. Got to go with the good stuff for this great trading week. So cheers, everybody. Happy Friday. All right. Trading week wrap up. Obviously, we've got a lot to talk about with regards to broad market indexes. It is the 22nd of September. You can see my wall here full of data. All kinds of data going on in that. I do have to make it to the show. We don't want to get all hammered by the end of the program, but we'll do fine. We'll do fine out there. Don't worry about me, folks. I'll be good. Anyway, going into today, it's funny because every day I do these shows, or every night I do these shows, afternoon, I'll have an expectation of what I think is going to happen for the next day, and didn't do what I thought I was going to do. I'm going to start with that first. What did I think was going to happen today? Well, I looked over that dollar index. I saw a shooting star. I thought we'd start to drift down lower. I thought we'd break the lows of yesterday's trading session on that dollar index and therefore create some selling pressure in our markets. Well, it didn't happen. We actually just kind of rallied, made a new high today in that dollar index, which should have pushed the market down even more. Now, all said and told, it wasn't a, let me get the volume off this chart. It was actually positive for a little bit during the day, so we did get a bounce. I thought it would be more. And then closing your session lows. So all in all, a very bearish week. You can see on this, we've got last 5 trading days. It's been pretty much all down. I think, let me see, did we actually breach the 3% mark? Let's see, there's one. We'll go from that closing right there to the closing price. We're down 3.05% from last Friday's close. So not too bad. I thought it could have been a lot worse. But certainly enjoying that. I still am short. I did not close out any of my Russell position. I did, however, close out 2 other positions. So last Friday, I did something I don't normally do, which is I ran through kind of my thought process for Monday's trading session, right? What were some setups that at least looked interesting to me? Not saying that these are trades, not guaranteeing anything, but at least whittling through on a Friday probably several hundred different charts, actually probably several thousand because I use some filters for, and then I click through and find ones I find appealing to me that might make trades. And 2 of those were NI and Duke. Well, here is NI's chart for the last week. Here's NI. Thank goodness the last 2 days. I ended up dumping out of this one. Let's see. There was one I just dumped near the end of the day, and the other one I did as it hit a demand. So I think the Duke Energy, yeah, this was an end of day. Actually, I'm sorry, I can't remember which one. I think I ended up dumping this guy as it hit this demand zone at 26.72. So all in all, that was about a full point taken out of NI. And then you also had Duke Energy, which looked great over the past couple of days from a selling perspective. But I also had a target set based off these lows from the previous day. So I got out, left some money on the table on that one. But just letting you know, those 2 are closed. Good, Eric. Good to see you with the name spelled the right way. E-R-I-C-K. So those trades are now closed. And I'll walk you through some of my scans. I didn't do an in-depth scan, but just kind of high level looking for haramis, hammers, shooting stars, and extremes with regards to Bollinger Bands. It's kind of my initial scan, which I did today. I'll probably sit down over the weekend and dig a little bit deeper into some of those. So we'll look at that. Let me run through our top 7 here. Our top 8 from the bottom. Yields dropped today. Yay, hallelujah. Big Eb has been making a point of it, and so have I, that the higher this thing goes, the more problems we're going to experience. And I got a question, which I actually couldn't find it today. Someone sent in a question, and I tried to find it again. I don't know where it went, but it was dealing with the bond market and kind of, well, why are we seeing that long end of the yield curve rising? Why is that one rising? Because that's just market demand. And again, it has to do with the government needs money to service its debt. We've got $33 trillion worth of debt. Government needs money to pay that. Where are they going to get it from? They're going to issue new debt. And the more that people feel uncomfortable with our government and their ability to pay these debts, those yields are going to get higher. And that's partially why we see this chart look like it does right here, right? It's been making higher highs, higher lows. Good news is a little bit of a pullback today from that 450 mark, which is the highest it's been in quite some time. Let's bring up the weekly here just so you guys can see exactly how long it's been since we were back at those levels. It goes all the way back to 2007. So again, we're looking at 16 years since these rates have been this high for that 10-year. Now again, if we look even longer, let's say I go to a monthly, This doesn't look like it's that big of a deal, but it is, right? It is because it's changed so drastically. Back here, let's say in the 80s, when we were up around 10, 12, 14%, we started drifting lower and lower and lower. You know, that obviously was good for the markets. That's good for the economy. It was cheap, easy money and people feeling relieved. But we just kept on going and going and going. And it took decades to get to that low point that we enjoyed back in March of 2020. We were down about 0.3%. It's the ascent here, to me, that's the challenge for our markets. And how do we deal with a market that has changed that quickly? That's the challenge I think we face right now. So all in all, we're lower than historical averages, but we've had such a dramatic change. This is certainly going to impact our markets going forward. So that was your worst performer, and probably good for many of you, down 1.33% on the day, but still that trend is absolutely intact and looking stronger and stronger. Next on my list here is Bitcoin. Not really much to speak of. It was kind of a boring week for Bitcoin, pretty much unchanged for the 5-day window, down 0.26% on Friday. All right, now we get to the good stuff. There's your S&P 500. Now, we talked about yesterday how it came right down into that demand zone, and that's kind of why I was thinking we'd see a bounce today. Well, we did get it. We got a little bit of a bounce back up to 4,400, and then it hit 4,400 and came right back down. Actually got to 4,399, so not even 4,300, or 4,400, just a hair shy. What's noteworthy here, at least for me, is the way that we close. Now, it is Friday. We have the whole weekend to digest and new news to come out and new opinions and new influencers and new manipulation by central banks, etc. But right now, this is a very bearish sign. You know, after a aggressive move like this, and I'll just go from what we started on last Friday. We'll go from the peak here to the bottom. We had a range in the last trading week from Friday to Friday of 4.5% for the S&P 500. That's a pretty significant decline. Now, typically, I think so many of you have experienced this, when you have a really sharp sell-off, you know, several percentage points, typically going into a Friday, you'll get a little pop up here as people become value hunters. Like, oh, it's down so much. It's a good deal right now. I'll buy some. Well, we had that for a second, and then all of a sudden, the sell-off continued, and it got weaker and weaker and weaker here. So this is a very negative one. Absolutely a great breakdown in the ES. I think it's even better for the Russell when you look at just the triggers for it, because, you know, where was your real clear demand zone that this broke that was the catalyst, right? There are a couple we could point out, but I don't think any of them were that strong. Now we're near this lower demand zone, and boy, I'll tell you, if we get below the low point here, which goes back to August 18th, that low is 4,350. We're 12 points above that today. If we get down below 4,350, let me make sure I get that number. Yeah, 4,350. You know, I think you're going to fall very quickly to the 4,300 mark, which would be another 50 points. And then from there, if that panic does start to set in, it could be problematic for our markets going forward, which again is why I'm still holding on my short position till it hits that target or gets near October 17th. Now, here's one I like a little bit better, because you had breaking points on this Russell. Now, you guys tell me, because you're looking at these charts. I know this head and shoulders pattern. Do you want me to leave the gray lines on here for the head and shoulders pattern, or should I just leave the target line? It's up to you. You guys are the ones have to stare at this chart. I feel like the head and shoulders might be a little bit distracting for you, but I think it is kind of a good education tool to look at and say, okay, there's the head and shoulders. Here are we set our targets, etc. You guys let me know what you want, and I will be a democratic show, and whichever vote gets the most. Actually, here, let me just do a chat. Let me do this poll. I'll engage with my audience. Start a poll. I should. Second there. H and S. There you go. You guys tell me. There's the poll. It's Friday. We got a light group, I know. But should I remove the head and shoulders lines on the Russell? I'll just leave the target one. If not, I'll keep it there just so we know why I had that one in place. Okay? So, all in all, I think the Russell was better because you had multiple points at which you could have said, I'm going to start shorting when you break. And it could have been this where my cursor is here, right as we broke this little consolidation point around 1848. You also had starting to break these lows right around 1831. You also had breaking this low at 1836. So there are all these little trigger points that I think could have been good for anybody looking to go short. What I'm interested in now is I don't see anything on this daily time frame that is leading me to believe that we're going to slow down anytime soon. And we did finish like the S&P with a right near the lows of the day. We had a nice rally, gave it all back, and ended near session lows. So I wish that this was Thursday. I really wish that this was a Thursday, because that means my probability for tomorrow going down would be much higher. Again, Monday, everything can change. But my forecast is still that we're going to hit that 1825 mark. If we go through that with any speed, I will take this and leave my trade open and target that low down around 1650, which I hope we get by the time my options expire. If those options, by October 17th anyway, if we get down to that level, that will be a great, great trade. I'm happy for it. All right, let's see. I'm going to end the poll here. You need a shaded box in the form of a person's head and shoulders. Yeah, I don't have that capability with this platform. So let's see, what did I say? Should I remove the head and shoulders lines on the rut? You guys said 67% of you said no. Okay, perfect. That's easy. I can do that. I like a skilled stockman says, leave it. Great visual for learning for newcomers and old timers. And again, we don't know that this is going to come to fruition, right? Fingers crossed it does, because I've got a nice position on. I wish I had a bigger position, but honestly, my position is big enough to capitalize on that move. And measuring objects that I've used here, and again, I showed you kind of how you use a measuring object. This little line right here that I'm moving around is simply the top of that head to the neckline. And it's actually slightly off. It should be straight. There you go. So there is your measuring object, which should give you an idea if this does break the neckline, which it did here just 3 days ago. Where might it go? And now that gives me my target, which is right around 1650. So anyway, I'll leave that one on there. Russell was down 0.29% today. Actually ended up, I thought I was going to give back some profit today. Actually made some on the Russell today. So cool. I'm happy about that. Let's see what else we got. NASDAQ, slightly up, but look at that picture. Guys, this is really a negative looking formation, man. It looked like the markets had a little glimmer of hope, right? I'm sure some of you were like, here we go, we're going to have a little bit of rally. I thought so too as well. I thought we'd have give us a 1% rally up after such dramatic sell-offs. The fact that we did not get legs today is very telling. It means those people who usually are opportunists, buying value, right, just weren't there today. Ouch. Not good. That was your fourth place finisher. Dollar index, slightly higher today, which may have been part of that catalyst we talked about. A strong dollar does not bode well for our markets. It was up 0.19% on the session. You had gold up 0.31%. Nothing really technically here. What is somewhat noteworthy, and let me change the way that this line looks, is we have this dotted red line here near the bottom. If I put the line across these lows, I'm actually going to do it from where there's more body point contacts. If you put a line right here, and I'll change this to a different color so it doesn't start to, let's go, not gray. I will do a slight, I think that's green. I'll do a green one. If I think it's green, I'm colorblind. But, we're no longer on gold to the point where we're now touching these lows repeatedly. If we were hitting this 1900 level on gold futures and still trending down with this lower gray line, that would be a descending triangle, right? Which means that the probability is higher that prices are going to break down. This is interesting to me because you're seeing now gold is no longer making lower lows and it actually is making higher lows. So you're getting compression. Now, which way it goes is anyone's guess. Typically when something does this type of pattern, which is really a pennant formation, it will go in the direction of the previous trend. Well, what's our trend here? Are you looking at it as a big bullish trend from what happened back in November and this is just the pullback? Or is it from this part of the chart that says we've been trending down, now we've got consolidation, break to the downside? This one makes it very, very difficult to definitively say which way this one's going to go, or at least with a high probability. But good news is it feels like it's consolidating, and typically after consolidation, the longer it consolidates, the bigger the move is, especially with something like gold. So I'm excited for that one. I did sell calls today. So I have a bunch of silver. When silver was up at 2170 today, I sold the 2250 calls. So that puts me right here. Let me get rid of some of these other lines. As you guys know, I was exercised a bunch of my silver last week at 2150. So now I'm in the money on that trade. I sold the 2250 calls. I did that for October 20th. So I am going out a bit. For those who want to know how long that was, I generally, with this weekly wheel I'm doing with options, I'll go out to the next month. So I have until that red line, vertical red line, to get to that 2250 or stay below it. Either way, I don't care because I have enough silver that if we went from 2150 to 2250, I'll make a full dollar on all of mine. I am more than happy with that. Plus, I'm collecting another 1% for selling those 2250 calls. So if any questions on that or how that works, just let me know. Type it into chat and I'll elaborate on it if you guys like, especially after a sip of this whiskey. All right, Daryl says, great call on staying short. Well, it's tricky. I'm not going to, don't say great call yet. It's a great call when the trade's done. I mean, we could have something happen over the weekend and the market shoots up 8% on Monday and all of a sudden all that nice profit I have in that Russell could disappear. So it's like cheering on a football team or I've been in many situations where my 49ers, which played pretty good against the weakened Giants last night, it's kind of like saying, oh, my team's down 2 scores. It's hopeless. No, it's not. Until there's double zeros on that clock, until the game is over, until my trade is done, there really isn't anything to brag, boast, or discuss. At this point, what we talked about on this program a couple weeks ago has been working, right? Those trades on Need, those trades on Duke, those have worked out. I had an S&P that got stopped out. That wasn't great either. So, welcome, Lori. Finish hosting Simple Options. Yes, you're making your options difficult by just talking and talking. It's good. So yeah, so far it's working, Daryl. I'll let you know when this trade is done. As of today, as of Friday, it's been pretty good, right? No complaints yet. But these markets are unpredictable. We could see this Russell just go screaming to the upside. Now I've got a lot of factors, at least in my my checklist, if you will, a lot of factors that are really pointing more towards more downside moves. So that's one of the reasons I got a little bit greedy. Still am greedy going into the weekend. I tell you, it's difficult. I think many of you would appreciate this, I'm sure. And if it happens to you, just type in the chat, yes, happened to me, I hate it, or no, never happened. Here's what it is. You find yourself on a nice winning trade. You told yourself, here's the parameters, my entry stop, my price targets. And you're like, okay, here's the trade setup. And you enter it, and all of a sudden, it moves way quicker than you thought it was going to happen. And within a day or two, you're up significantly on your trade. And you get so excited that you're like, oh, well, shoot, man, I'm just gonna take profit. And you close that trade out. And you're like, you sit there and you pat yourself on the back. You're like, man, you great trade. You made some great money. And then over the next 3, 4, 5 days, the next week or a month, you would have made 10x what you had made on that trade. Happen to anybody here? I'm sure it's happened. I'm sure it's happened to some of you. And if you haven't, keep trading. It'll test you. So at this point, my assumption, which I mentioned to you right as September started, was September historically is a negative month. October is also pretty bad. So I think we're going to keep on going down. Anyway. No, Lori doesn't have a YouTube channel. Maybe we should do a separate show so I can help Lori, and then she can also help me with viewers. Maybe we can do a pre-recorded show, Lori. You can do a 20-minute pre-recorded video on options. Exactly, Daryl. Greed is good until it isn't. Exactly. So anyway, just trying to tell that story to some people because it should resonate with all of us as traders. It's unfortunate, but man, and granted, there's also times where you've jumped the gun, gotten out, and it ripped the other way, and you're going, oh man, my intuition was so good. But my intuition is we're going to still keep on drifting lower. Okay, so I went through my knee trade. I went through my Duke. Those are both closed. I sold calls on my silver just so I could have protection on that. So right now, all of my silver is protected. I've got some at 22.50, and I've got some at 22, all of which expiring October 20th. Now, the final one on here was crude oil. Now, crude oil has been making some interesting patterns. We had that shooting star formation back on Tuesday. It did follow through for a couple days, then rallied back up, and now you kind of have another shooting star here. So it's challenging. I still think crude oil is due for a pullback here. I definitely think we're going to come back down probably that 87 mark, but I still just didn't have the conviction to hold on that Duke. Like I said, it was a nice fall for a couple days, or the knee as well, and I just wanted to take that profit off the table. Okay, so there's that. What else did I want to go through? So let me real quickly go to one viewer question because I want to make sure I get this out of the way because Mario, you have asked twice and I didn't get to it. I spoke about it briefly yesterday. So for those of you who got hosed by Celsius and Voyager and BlockFi, it's been pretty ugly. The good news is Voyager, I got my money out of Voyager, some of it. I think I got, what did I get, 21 cents on the dollar? 21 cents on the dollar. I'll take it. Just give me my money, lesson learned. I won't ever do that again. Celsius has been locked up and going on forever, and right now it looks like, I think with Celsius, I'm going to get 27 cents on the dollar. But you have to vote in favor of this proposal. Personally, I don't think the proposal is that great, right? So you have to vote by end of day today. And I didn't think the proposal was that great. I just want my money. I want something. So give me 27 cents on the dollar. I'll lick my wounds. I will spread the word to everybody here. Don't use BlockFi. Don't use Celsius, and don't use Voyager ever. Stay away from those companies, right? Leave them alone. Burned you once. Don't let them burn you again. I will talk bad about those companies, and I will never use them ever again. Just give me my money. So, Mario, I voted in favor of the proposal. Hopefully, I will get my 27 cents or 23 cents on the dollar here sometime soon. And just chalk it up to a learning lesson. Good news is I had most of my crypto on cold storage device like my Nano Ledger here. So, now it's moving. So great. I wanted to make sure I got this question done. He says, if you can please take a look at the voting deadline of September, 22nd of September. And if I recall, you also had some crypto with Celsius. Yes, I had quite a bit actually. So it'll be interesting to hear your thoughts. Vote for it. Just get it over with. Be done. You know, there's no way you're going to get all your money out of Celsius. You'd be lucky. For me, it's just going to drag on and on and on if you don't approve this. It'll go on and on and on and on. I'd rather it be done, take the money I have, and then go back to what works for me and grow that capital, as opposed to just hope I make a little bit more on the deal. All these bad crypto companies are really dragging blockchain reputation through the mud. Yeah, it's funny. It shouldn't, right? This really has nothing to do with blockchain. It's zero to the blockchain. What it has to do was with transparency of marketplaces. So if you look at what Celsius, Voyager, and BlockFi did, for those who may not know, they were lending protocols which you could deposit your crypto there, a place to keep it, and they'd pay you interest, right? So if you look at, let's say Bitcoin, I own Bitcoin, you could deposit Bitcoin and they'd pay you 6% interest. 6% on top of whatever it is I was going to make for holding Bitcoin anyway, because I was going to hold Bitcoin. So why not make an extra 6%? So what happens is they pay you 6%. You got to ask yourself, how are they making that 6? They need to make enough money from that loan of Bitcoin. I'm essentially loaning them Bitcoin, just like your Chase Bank would, or Bank of America, or Wells Fargo. They're taking your deposits and lending it out to somebody else. So what they did is they lent it out to somebody called Three Arrows Capital. And Three Arrows Capital probably said, hey, we'll pay you 12%. So Celsius, Voyager, BlockFi are all going, great. We borrow it at 6 and we lend it out at 12. We make 6%, free and clear, no risk to us, right? Just we're an intermediary. That sounds great. But now you got to look at Three Arrows Capital and say, okay, well, Three Arrows Capital is paying 12%. How the hell are they? What are they going to do with it? They need to take that Bitcoin now and make more money with it. So what did Three Arrows Capital did is they put it in a thing called Anchor Protocol, which is a stable coin backed by Terra Luna. And Terra Luna started to have some problems. With the Anchor Protocol, they were giving 21%. Actually, it was 20%, excuse me. So BlockFi's borrowing it at 6, lending it out at 12, meaning BlockFi now has 6% positive interest. Three Arrows Capital, borrowing it at 12%, they lend it out at 20. They're making 8% pure profit. Well, now you got to ask yourself, how's Anchor Protocol going to make that money? And that was the Ponzi scheme. That's where it all came to a crescendo and fell from there. So, you learn about that. Unfortunately, I wasn't bright enough to figure that out. Kind of shame on me. So now I don't do anything with lending protocols. I am doing predominantly staking, which is going to reward me per code. The code itself is the one that's paying me as an incentive to lock my cryptocurrency into the specific protocol. So anyway, that's a little bit nerdy crypto stuff right there for you. But thanks to you, I got my money out of Voyager the day before they stopped. Oh, awesome, Lori. I'm glad you got it out. If you are in any of these things, you really have to pay attention, because if you don't pull it out in a certain amount of time, it's gone. You won't get it. So there you go. All right, what do I got here? Time-wise. Perfect. So let's go through two things. Actually, let me go here to Twitter. 1 second here. So I was following this one, and I think it was either Lisa or Lori. I think it was last week, or I lose track of time. I apologize. One of you mentioned, hey, here's an example of insider trading, right? And I was like, well, it could be. Check this one out. I want to show you this bad boy because this is just absolutely the definition of insider trading. I need to scroll down here so I can find the screenshots. It's going to take me a while because this guy posts like hundreds and hundreds of different things. There's a gentleman on Twitter that, I don't know if it's a gentleman, an organization, whatever. It's called Unusual Whales, and they post a lot of stuff. But some of it I find pretty interesting. And again, with data, it all comes down to trust but verify, right? Making sure that you look at things objectively. So here's what I'm going to do, and I don't know how to set this one up. I want to call it a donkey of the day. I haven't done that in quite some time, but I want to do a donkey of the day here. And I think that the donkey of the day, it has to be the SEC. It has to be the regulators. And we'll make it a double donkey, all right? The first one is the individual that made this trade. So here's the setup. Let me bring up Splunk. I don't know if you guys saw this. Some of you may have, but SPLK. So here's the stock, Splunk. All right, and you can see, look at this huge gap here. So this was very interesting. Notice on Wednesday, Splunk was a very narrow range. Look at the volume on it. Volume here on Wednesday was very low. Someone, they don't know exactly who yet, went and bought 127 call options on Splunk for 127. Let's see, they didn't say the quantity, but it was the 127 calls, right? And I'll bring it up here, and let me show you the 127 calls. Here's 127. You guys can imagine that if price was trading at 119, the price of the 127 calls expiring 2 days later was really cheap, right? What are the odds of this stock, which doesn't move that much, going from 119 to 127? Those options were cheap. Well, they bought $22,000 worth of call options at a 127 strike. Now, the next day, there was a report, well, not a report, there was an announcement that Cisco is buying Splunk. It jumped massively. And now those 4-cent options, they bought them out of the money for 4 cents, are now worth $18.30. That's a $45,650 rate of return in under 24 hours. So why do I have it as the donkey of the day? Because this could not be any clearer example of someone having insider information and making a trade off of it, right? This is as crystal clear as it gets because nobody in their right mind would buy the 127 call options expiring in 2 days. You know that's 99% probability it's going to expire worthless. So why would you make that trade? They knew something. And unfortunately, our regulators are pathetic. The Security Exchange Commission is focusing on things that aren't that relevant, I believe. And they're going to let this one slide by the wayside. Now, it's getting a lot of publicity. So hopefully, this donkey who did this will get caught. Now, what they should have done is, let's say we are a group, and I've got, I've got 85 views. Only 47 people in here today. But if we all said, hey, guys, news is coming out tomorrow. I got an announcement for you. Cisco's going to buy us tomorrow, buy Splunk tomorrow. So what I want all of you to do is go out there and buy, $1,000 each worth of these call options expiring. That might be a little safer than one block. So, yeah. Yeah, well, they expire, but now these are in the money, right? So this person now owns Splunk. He owns however many they bought. I didn't say how many they bought, but he now owns it at $145 per share, and he paid $127. So he's got $20 per share free profit. Free, right? Crazy. And he bought them for 4 cents a piece. That is number one. The donkey of the day will be our regulators because they just couldn't track that one. And why don't we give it a double dip? Let's go with second donkey of the day. I haven't done these in so long, but when you look at the donkey of the day, none of them compares to the Security and Exchange Commission and their pathetic fines that they hand out to giant corporations and trading firms for doing illegal activities. So you may have seen today that Citadel Derivatives settled for $7 million. $7 million. That's like me robbing a bank and settling for 3 cents. I've taken hundreds of thousands of dollars out of that vault and I go, 3 cent fine? I'm sorry. I won't do that again. So there's a thing called SHO, which is basically short handling rules and ways that orders are supposed to be processed by market makers. Remember, Citadel is a market maker. That's their job description, technically, as they're out there making buy and sell orders. Because they're an institution and they have tons of clients buying and selling, it's their job to make sure that if an order comes through and it's a sell, is it a sell, is it a short, or is it a short with restrictions, right? There's kind of 3 different breaks. They've been mislabeling for 5 years these trades, which gives them a tremendous advantage. It allows them to do naked shorting and all sorts of other rules. And these statistics that they're required to report properly were supposed to be sent to regulators so regulators could make sure that there was no nefarious activity going on the part of these institutions. So let me get this straight. You guys are all trading companies, and I have told you, I'm your regulator. If you screw with me, I'll mess with you. I want you to report all your trades to have these 3 things, 1, 2, and 3. And you're like, okay, great. Yeah, we'll do that. For 5 years, you sit there and violate all those rules. It's taken me as the regulator 5 years to figure this stuff out, and I finally catch you. I know that you've made tens, if not hundreds of millions of dollars over 5 years, and I fine you $7 million. I mean, I wish there was a more direct line that we could get in touch with our regulators as well as our regulation agencies like the SEC and call them out on this stuff. I mean, I have 2 really clear-cut examples of how the system is rigged. Number 1, they're too dumb to find insider trading, which is completely obvious. And number 2, they're fining these guys minuscule amounts for doing serious violations and harm because they're trading against customers' order flow. Terrible. It may have been the pixelation. I've noticed that my internet was kind of weak today. Did it pixelate here? Yeah, possibly a Bernie Madoff type of situation. Let me see. I'm going to try to look over here and make sure I have my screen. Uh-oh. Let's see. What if someone overheard a conversation out in public and made that Splunk option play? Technically, that would be insider trading. Technically. But you're right. What if? What's surprising on that one, Tom, is that not one, the volume is pretty clear that nobody really knew it, right? If you look here the day before, I'll just scroll to this one. Look, volume looked normal on Wednesday. Everything was fine. That's why they went to the options market. And then, bam, just crazy. I saw this years ago. I think I told you guys this story. There was some company that, it was very similar to this. On Wednesday, there was a huge surge in volume in the last 5 minutes. It was like 10 times normal volume on that stock. And I can't remember the name. I apologize. It was a long time ago. It was 2001. The next day, Sony said they were buying this company. And I'm like, this is the clearest example of insider trading I had seen. So I actually called the SEC. I sent stuff to the SEC. No response. And finally got somebody on the phone. And I can be a little bit vulgar sometimes. And I let them have it. I'm like, you guys are pathetic. How do you even, you're not doing your job. I've given you all this information. This is clear-cut, easy example for you to look at and go, yep, somebody knew something. Let's find out who it is. Let's find them. Or find out the circumstances anyway. He got all upset with me and said, oh, don't talk to me that way. I'm like, listen, you're not doing your job. I pay your taxes. All right? You're the one who's getting paid by me to do your job, and I'm doing your job for you. He said, send me all the information, all the pictures, the screenshots, and write up a description of what happened. I'm like, that's your job. And I just hung up. I was done with it. Dave says, if the SEC finds or confiscates the entire profit, would they destroy our economy? Well, they wouldn't be able to track exactly how much money they made off it. I mean, they don't know. It's all purely speculation. What the SEC wants to do is just settle. Right? The SEC doesn't want to go through long-winded pieces. They just want to say, hey, we caught you, Citadel. And by the way, Goldman Sachs is accused of the same thing. They haven't settled yet. Citadel settled for $7 million. So what SEC wants is to get those fines, fine them, prevent them doing, and now they'll keep an eye on it and make sure they don't do it going forward. They'll find some other way to game the system. That's just the nature of a trading and investment firm. It's like laws, right? I think all of us, this is going to sound bad on my part, I apologize, but I know that the speed limit here on the freeway in Southern California is 65 miles an hour. We know that's the law. Technically, I could get a speeding ticket for going 66. However, I'm pretty much always on that freeway, if I can, doing 72. Because it's kind of an unwritten rule. You can fudge the number by 7 miles an hour and the cops will leave you alone, right? That's just kind of the norm. And I think in the financial world, it's even worse than that. Right? They know what the rules are. They will skirt those rules and take advantage of the system until they get caught. And by the time they get caught, they made so much money anyway. Who cares? We caught you. Now let's go golfing together at the club. Pretty much, Margaret. Pretty much. You got to love the cronyism. All right. I don't want to make a long show today, so let me go into a couple of things here. I mentioned that what I'll start to do, if you guys wanted, was kind of go through different things I see on my radar for Monday. Again, these are not trade recommendations. I'm just saying they're things I'm looking at for Monday, and if the situation or the criteria meets what I'm looking for, then I will take those trades on Monday. No, actually, not all of them. Maybe some of the trades on Monday. So let's start off with, I'm going to start off with the bearish ones. I only have a couple of bearish ones lining up. A lot of stuff actually looks rather positive. It's just because we finished near demand zones. But UNH, oops, I did it backwards there. UNH is my first one, United Health Group. And the main reason I'm looking at UNH, it's not a, candle, shooting star, or anything like that. It's just if you look off to the left-hand side of your chart, you'll notice that there has been this kind of lengthy consolidation. It was sideways for quite some time, and now you're kind of in the middle of that range. So I'm expecting there to be some overhead supply on this one. Plus, it's also had 3 just ballistic days to the upside, right? It went from under 480 to over 510. Well, that's a $30 move in just 3 days. That's pretty good. So I'm looking at this as a potential short opportunity, but it doesn't give me clear-cut rules, right? Normally what I like with the hanging mans and haramis and shooting stars and hammers is I have very clear specific rules. Now, I'm not going to be waiting for a price to break the low of today's trading. It's just too far away. So this will be more subjective and saying, okay, if I see it start to roll over on Monday, I'll start shorting, and as it falls, I'll add more to that position and kind of snowball into that position as it goes. So I like this one just because it's an overhead supply, which has been there for quite some time. Last time it shot up like this, hesitated for a while, and then started to sell off. So that's the first one. I think Kraft Heinz, KHC, was that the second one? Kraft Heinz, at least for me in this picture, and I know Michael, one of our guys here, he was talking about how he wanted to go long Kraft Heinz. I'm like, okay, well, this pattern is like a short on top of a short. So what you have here is a bearish harami formation on Kraft Heinz right now. You also have a shooting star. After a nice run up in price, you get the long topping tail, body closing near the low of the day. So this is kind of a double short in my opinion. You've got this bearish harami, which means it's going to go down, and you also have the shooting star. So easy. I'm just going to put a line right across the low of today's trading session, which was 43.13. All right, that was your low. If we open up above that and start to break down, I'll do it just like we did with Duke and Knee, which would be shorting that one. And then what was the third one? And again, the reason I like this as a short, everybody, is look at the trend of it. All right, it's been just lower highs, lower lows. So all in all, it looks like the higher probability trade is to be going short here. Volume is fine as well. No problem, Les. Have a great weekend, my friend. Thanks for all you do. Humana Health. So I don't usually do healthcare stocks, but this is similar to what we saw with United Health Group. You've got a really strong rally. You have hesitation on today's trading right into overhead supply. So again, I think that is a decent short opportunity as well. Now, those are just kind of 3 short opportunities. I wanted to show you kind of little difference in selection process. And I need a sip of whiskey for this one. All right. When I run through these markets and I'm looking for, I always start with chart formations and then I go back and look at supply and demand zones that I think are relevant and see kind of where things line up. I might find a pattern that looks really good and I go, man, I really like this one. I think I'm going to maybe make a trade on this. And then something will happen and I go, no, can't touch it. So let me give you an example what that one is. I looked at TFX, one of the first ones that came up on my screener today. And you have this just ridiculous sell-off. This is Teleflex Incorporated. No clue what they do, don't particularly care, but it's been just nothing but down from $260 all the way down to $204 in just a couple of months. Now, if I look off to the left-hand side here, it's also very near this area of demand. It also closed that gap. So it looks good as a potential buy opportunity. So I was initially thinking I'd trade this like a hammer formation. If it opens down below 204.73, expect that break to the upside, and I have a nice trade on. Then I looked at volume. And I went, wah, wah. Its volume is only, it was huge volume today, 395,000 shares. So right away, this is off my radar. I won't trade this one. Too thinly traded, because typically, depends on the price of the security, but I like to be trading in 1,000 share blocks if I can. And this would be a $204,000 trade. Most likely the options are extremely liquid if they even exist. So this is off the radar, even though I like the hammer into demand, leaving it alone. I also had CMA on here. Now this one's a little bit better. right? You've got that CMA. You've also, it's coming down towards this $40 mark, which is, it has not been able to get below that since June of this year. Again, big aggressive downtrend. You have a hammer formation today. I'm okay with this one, and I made sure to check the volume there, 1.5, which is the minimum for me. So I will look at this as a break above 41.55. Fine to go in on that one and go long on that trade. So that was, we got TFX with the volume problem. CMA, I like better. A car was another one, but we have issues with volume. And again, this is a Harami formation. It's a Harami, which is actually past the area of demand, which is kind of why I'm kind of, not that big on this one. And you look at volume. Volume is fine. 3.4 million traded yesterday or traded today. So all in all, this one looks okay, but probably not going to be high on my list. All right. And if there's any questions on these and kind of what the structure is, how I would trade them, just let me know and type them in the chat. One that I did think was interesting is Starbucks. So Starbucks has had a pretty ugly sell-off as well. It was up right around $115 per share. Now you're down around 93.5 or 3/4. I'm looking at the picture. It doesn't look great, right? Starbucks looks like it's just been drifting lower and lower and lower. However, we are right near the origin where it gapped up on November 10th. And you have a Harami formation. So I put a red line above the high of today, which is 94.31. If we open up below that and rally up, I will go through that and make a long trade on Starbucks. Obviously, plenty of volume on Starbucks. And there's some other big names. I won't go through them all, but here's McDonald's. Also has a great Harami formation, bullish Harami formation on McDonald's. You got Target, right? Target, very oversold right now. I mean, Target's just like it's just imploding at this moment, and you are now down below this area of demand, which we talked about a while back, right? That big yellow box on your screen. So I'm looking over here. Let's just real quickly look and see, is there anywhere over here where I might be interested in picking up Target, right? Just based off of this. Well, I personally like things like right here where you had the sell-off, hammer formation, then it ripped out. I'm okay with that. Those pumpkin spice lattes should save Starbucks. Oh, gosh. I don't know how people love pumpkin so much. It's just disgusting. Ugh. So I look at that 108.85 mark, right? That's the red dotted line. And, we're pretty close. Maybe I'd think of maybe selling some puts at that 108 mark or 109. You're going to get some great premium, although, you're catching that falling knife. There's a lot of pain going on with Target right now, and who knows if that's the fallout from their poor marketing decisions or just the backlash to their marketing decisions. I love pumpkin seeds, Rob. I actually really like pumpkin seeds because they don't taste pumpkin-y, but like pumpkin, if you want to offend me, buy me a 6-pack of pumpkin beer. It's going right in the garbage. You're just going to waste your money. I wouldn't even give that to charity. Pumpkin beer? Come on, man. Never liked pumpkin pie. No. I lived in Australia for 8 weeks, and the family used to take, their whole thing was they would make mashed potatoes, but they would throw in pumpkin into the mashed potatoes and mash that. And I just hate the taste of pumpkin. Ugh. Anyway, I grow pumpkins. I got a couple pumpkins in the yard, but yeah, weak economy. I agree with you, Margaret. But then again, what does Target sell? Right? Target is your cheap place. Let's look at Walmart. Right? Walmart not looking the same. Yeah, no pumpkin beer, Lisa. Please, I'm dry heaving just thinking about it. And look at Walmart. Walmart looks fantastic from a technical perspective, and then here's Target, which is basically the same thing, exact opposite. Right? Looking really ugly. So, maybe there's something I'm missing from an economics perspective and fundamentals on Target, but at some point, Target will probably bounce. It's a good company. People love their Target. Retail therapy at Target. What else did I have? Bank of America was on my list as well, just BAC. And part of the reason was you're coming back down into these lows, although you might notice here it looks like a head and shoulders pattern. So it came on my radar, but not really comfortable with that one. So I think that out of all of these, I like the CMA, probably the best. I do like the Starbucks setup, and there's a few others, but no real amazing ones. Like last week, I thought the Duke and the knee trades were screaming at me. I got grumbling with the filter I ran today, so nothing that's that exciting. Coffee is for the week, right, John? I don't drink coffee at all. I'm surprised I'm high energy without coffee. Can you imagine me if I had coffee? I need alcohol to slow me down for you guys. I do not go to the pumpkin farm every fall because they want like $25 for a pumpkin, and I've got 20 plants. I have 20 pumpkin plants growing in my backyard. Now, it's funny. I have 20 pumpkin plants. And I think I have a total of maybe 5 pumpkins. For some reason, they're just not pollinating. It's great. Tom says Target is facing problems with student loan repayments starting up. Oh, okay. That makes sense. Discretionary items will be hurting. Target is more discretionary retailer than Walmart, which is necessity. I don't know. I think Target I kind of think Target and Walmart are pretty much the same store. I just think that Walmart has the reputation of being cheaper. I've actually been in both recently. Target felt a little more upscale. It did feel a little more empty. Walmart, I went to Walmart in Santa Ana, and goodness gracious, what a crazy place that was. Oh, man. All right. So there you go. I did some picks for you. Not picks, but at least some things to look at for Monday. I'll let you know if I take any of those trades on Monday. None are really exciting to me, but again, I'll have to wait and see what happens on Sunday night when the futures market opens up. Does not like pumping, but grows them. Yeah, I know. It's for Halloween, Lisa. It's only for Halloween. I love Halloween. It's my favorite day of the year. I am going to start. I might even start this weekend putting up some decorations because I typically do a haunted house and I scare the living daylights out of kids. It's great. I set up a camera last year and I recorded because I want to know when they come to the front door. I have a wraparound porch, so they have to walk through a tunnel. I make this really haunted tunnel. And I mean, kids are screaming, running off my porch. Oh, it's so fun, so fun. I know that they're deathly afraid of my house. Perfect. Nobody goes to Walmart just to wander around. My 3 feet. That's true. I went in Walmart with a targeted purchase. You're right. I don't go. Target, I do wander around. Anyway. All right, well, that's going to do it for me. Monday, you don't really have anything good cooking from an earnings announcement perspective or economic calendar. I am pursuing, again, I've mentioned this before, before I do it, I want to do a show where I basically discuss like what you should do when I have a guest on the program, right? If they offer you a newsletter, if they offer a subscription or subscribe to this or do this, I think every one of you is smart enough to know now that you need to have a junk mail account, right? Go to Yahoo or go to Gmail and do TraderMerlin junk mail at Gmail, whatever your email you want to be, make it a junk account and sign up for all of that stuff through the junk account. If you really love the services that these people will offer you, you can always move over or subscribe with your personal email or forward it. Do not, I repeat, do not sign up for any of these services that people offer on this program with your personal email. There's one guy that Larry wants me to bring on. I do want to bring him on. I think he's very smart, but he's also a prolific spammer on my email. I get probably at least 2 a day from this guy, and I would hate for you guys just to get frustrated as your email box gets full and full and full. So if you haven't done it already, go create an account and an email account that's only for junk mail, and just use that to sign up for all the offers you do. And if you find stuff that you really like, then move over. So it's frustrating because I actually signed up to get this guy on the show. I gave my email address, and now I'm getting spammed by him. So just as a warning, but it's not just this guy. I know that all of them, I've had one lady ask me recently if I could bring on this guest she's a publicist. He's got books and he teaches all this stuff. And I know he's going to try to sell you on different things, right? My personal recommendation, don't buy anything. If you got a guest in this program, listen to them, learn from them. You don't need to buy anything unless you really feel, you do some research and you feel like these people are, you know what, I will go and take a class with them or buy their book or whatever, but use your discretion. I don't want them being on this program to sound like an endorsement or a stamp of approval on my behalf. There may be some people after they come on the program, I'm like, yeah, I don't ever want you back. As you notice, there's been a lot fewer guests on because some of the people I just don't want back. Thanks, John. But I do also, I kind of need, it's a necessary evil for me because I need to get more viewers for this program. And by combining or partnering with somebody or bringing someone who has, 100,000 followers, that could actually help me out tremendously. So it's a selfish excuse for me to bring these people on. Hopefully you'll learn something along the way, but just be careful when you sign up for anything because they're probably going to keep spamming you and trying to get you to buy their services, their expertise, and how great they are. Mid-Journey, make an image of Merlin checking out towels and throwing pillows at a big restaurant. It's funny because I actually typed in my name, but it doesn't know my picture. But like if I type in other people, if I type in Jerome Powell, it knows him perfectly, or Elon Musk, but I'm not there yet. You need multi-million viewers. You know, if I got to 100,000, it would be great. Because if I got to 100,000 viewers, I would actually make enough on this program to just do this show. If you get to, let's see if you get to 1 million followers. If I got to 1 million followers, what happened there is I would be probably hire TJ, and I would spend a lot of money to set up a full production studio and take it to a whole other level of not just doing live shows, but producing content and self-paced videos and things like that. But you know, you got to have the money backing it, otherwise it just doesn't make sense. So hopefully 100,000 to me would be a phenomenal target. But again, I've been doing this show for over 3 years, and here we are not even at 6,000 followers, which means I'm getting less than 2,000 a year. So to get 100,000, I will be roughly 101 years old before we get there. So I'll be fine. I'll still do the show at 101. Anyway, that's going to do it for me, everybody. Again, if there are some people that you would like to bring on, you can always reach out to people and say, hey, contact Merlin. He's wanting to have guests on the show, or you can give me their contact numbers, and I'm very bad at contacting people in case you haven't figured it out. But I'm more than happy to bring more people on the program. As you know, there's only one person that I refuse to bring on. That would be Sam Seiden, because I think he's just a piece of dirt scumbag. But other than that, I'm more than willing to bring on anybody. Just know that they're typically going to try to sell you. How many OTA people have you been in front of over the years? I mean, if you think about, I was the main teacher from 1998 to 2001. And then I went over and taught at university, banks, brokerages, institutions, trade shows all over the world. And then from 2005, when I came back, I was the lead instructor for OTA for about 2 years, then did a lot of training. So tens of thousands of people over the years. If you got 100,000 followers, the chat would be filled with more nonsense than what I can provide. Good one, Dave. But nonsense would not be tolerated. You guys have fun. And again, I'm actually pretty quick on if there's any spam or disparaging comments towards people, hostility I'm not going to stand for. I can just mute you. But it would also, if I had 100,000, I'd probably have one of you or two of you act as moderators as well to help out, since you're always here anyway, you know. All right. There you go. Get them to see the show. I was your first one, Rob? Wow, what year was that? It was a long time ago. I haven't taught a physical class since 2010. Actually, I taught the crypto class, but I will be teaching in Irvine here in October, which is going to be exciting. Chat would scroll too fast? I don't think so. Unless I engage people, yeah. I've heard she was a young man at OTA at the beginning, I'm sure. Yeah, that's... I was spring chicken in that one. That picture you see in the lobby at Online Trading Academy was taken back in 1998. It was late in 1998 when they took that picture. I remember it vividly. Anyway, all right, guys, that's going to do it for me. I've got a little bit of my whiskey left. I am going to probably go take my unhappy dog to the dog park and enjoy the rest of the day. It's kind of gloomy out there. I hope you guys have a fantastic remainder of your day. Do something fun this weekend. Again, if you can think of ways, I guess I could be... ask you guys if you can think of ways to help grow the viewership or to get followers. I don't know. I'm not a social media expert. So if you got ways that you think I might be able to do it, let me know. Always open to some new ideas, whether that's new guests or new show ideas, new topics. Let me know, and I will try to grow this show and maybe get to the point where I can put all my attention into it as opposed to just an hour and a half a day. Anyway, cheers, everybody. Have a fantastic remainder of your weekend. Thanks for all that you do. Leave your comments down below the YouTube video or go to TraderMerlin@gmail.com to email me, and I will see you guys on Monday. Take care.